Hello and good morning, everybody. This is Bharat Jhunjhunwala, and I welcome you to the chart Kya Bolta Hai. Today we are going to look at Nifty IT. It's going to get ready. It is getting ready for a good move, it seems. So let us straight away jump on the chart and have a look where Nifty IT can move from the current levels. So as you can see that I have plotted the sectoral chart of the Nifty IT, and you can see that a post consolidation breakout, the IT have registered good moves in the past. So see, this was the first consolidation breakout, and again during the uh, Jan and June, it broke out again, registered good move, and now it has been consolidating again, and it has registered it is trying to register a breakout. There were attempts to break out, but it fumbled. But it seems to me that it is getting ready for a good move. And once it moves above this zone, well, it is the consolidation zone, and IT has been spending some time here. So once it moves above this zone, I think there is every reason for us to believe that IT can be the next emerging leader or the next emerging sector that can lead some markets into moving higher. So IT should be in your focus list, right? Because it is a very constructive pattern as of now, and as long as it is in the consolidation and trying to break out, I think many stocks in the IT sectors, especially the frontline stocks, the bigger ones, they have already shown good and strong patterns. It generally happens that the stocks break out first, the stock gets stronger first, and then the overall sector picks up because the IT sector, this sector indices is, has been made from a lot of stocks, not just a handful of stocks. So we will look at some stocks that are getting ready to move in the IT sector as well. So one thing is a little bit concerning, that is the RSI. It is trapped in the neutral zone, and you can see that this moving average on the RSI, or this the magic line on the RSI, has worked very well, and we can expect the IT to the sector overall to gain momentum once it breaks away from this line, and it consistently sustains over it. So as it have done in the past, you can see that whenever IT was in consolidation, it has respected this moving average as a resistance, and whenever it moves into momentum and it starts to move into momentum and it starts gaining momentum, it just break above this line, and its trends like started cruising and trending. So IT is a sector that you should be looking into in the coming weeks. So one other question that I always get, and always, people ask me, and all the new traders and curious investors ask me, that if IT is getting stronger, does that mean that Nifty will correct, or IT is defensive? Does that mean Nifty will correct? Well, see, I have drawn this Nifty chart, and I have imposed a Nifty chart on the IT and compared with it, and you can very well see that IT and Nifty has moved together in tandem. So at this point, Nifty broke out, IT broke out. They all went in the same direction. Post this consolidation, this was the second wave phase that was incurred upon India. The Delta variant was very much dominant, and then from this correction, the IT broke out, and we can also see the Nifty also followed. And again, at this stage, we are seeing the same type of formation, though Nifty has corrected a bit here. But I think that if the indices follows their past, right, what have they have been doing, I think the Nifty should follow IT also if there is a breakout. And another interesting thing that you should notice here in the IT thing is that post any correction that has taken place, right, you can see that this correction has taken place, and post year and year, IT has emerged as a leader. IT has emerged as a sector which has led the Nifty to recovery. So it's a very important sector that you shouldn't ignore at this point. And there are some, as I told you, that we will discuss some stocks that are getting very ready to move ahead. The first stock that I will discuss is, of course, HCL Tech. And on the HCL Tech chart, you can see that it is forming an inverse head and shoulders sort of pattern here. And it made a top at the September end, and now it is forming an inverse head and shoulder. And also, if I extend this line to the right side, you may notice that this is a very important support that has acted uh, in the past as a very important resistance. So this will be an SR flip zone also, and we are saying that there is a chance of good move in the IT sector now. As I told you, the inverse head and shoulder pattern, I think you can easily spot this pattern here. This type of an inverse head and shoulder is an accumulation pattern, and we are seeing that we got this pattern. There is a good breakout with good volumes, and it is also trading above its key moving averages. So SCL Tech is the stock that you should really look into in the coming weeks or days. I think that it is ready to make the move. So the first stock that I am betting on, or I am discussing, is SCL Tech. Second stock that I would really like to bring to your notice is Wipro. Wipro, you can see that during the market corrected, basically the IT stock was in focus and Wipro was doing very good. And I have also discussed this stock in the last Bajar Shorts update, in the weekly update that we do. And you can see that it has been very consistent, and it has always been a money maker in the past. So see the consistency and see the structure of the chart, so beautiful, right? And still I think that it has consolidated here post creating a top. It consolidated, now it is forming a saucer type of pattern, and there is a breakout from this pattern, and you can see the moving averages are all positioned very well. There's a good, and also RSI is very well positioned here. I can see that. So Wipro is a very strong stock in the IT pack, and a disclaimer: we may have a position in Wipro also, but again, I think that it is a very good stock to keep in your watch list and keep tracking it. And steady to move a couple of percentages from here. A very good move. You can see that all the IT stocks are not topped out together, and now they are all bottoming out together, and you can see the same type of formation that we saw in SCL Tech. That was the resistance, or the breakout zone is now acting as a support. So TCS also a very good formation, and you can see that we are getting a cup and handle sort of formation. You can call it a cup and handle formation, right? This is a cup and handle formation, and it is trying to break out from the handle, and once it registers this breakout, I think there is a good move in place. So we are keeping a watch on TCS also, but as you have seen that Wipro is the strongest amongst all these three stocks and all these three packs that we are discussing. Also, if you see Oracle Finance, it is taking support at the 200-day moving average. So though it is not very bullish, I won't call it bullish, but actually it is taking support. So when the other stocks in the IT pack is taking support, and the bigger ones, the leaders, are trying to move out, it's always a good sign to for the overall sector. Again, other stocks like Coforge, they are consolidating, and we have LTI. They are type of in a consolidation mode. So the big three, right? The big three stocks, the SCL Tech, TCS, and Wipro, they are ready to make their move, and I think that sooner or later the other stocks should also follow. So keep your eye on these stocks that comprises the Nifty index, Nifty IT index, and I think that it may again play good in the coming session. Now again, there is another way, a passive way or a defensive way to play the IT story is we have IT ETFs, the IT index ETFs. We have the Axis ETF, Kotak ETF. So let us see. We also have the NSE ETF. So you will see that this is the NSE ETF for which tracks the IT index. So if the IT index moves strongly, the ETFs will also move strongly. So your risk is not contained in a few stocks when you are playing with the ETF. So see, of course, when you are betting on low risk instruments, we should accept low reward also. That goes hand in hand. So this is a passive way, not very aggressive, not very risky way to play the IT story. So there are other ETFs also that track the IT sector. You can buy them and sell them as you do with the stocks. You will get the delivery in your Demat account, and when you think that it has made a good move, it has been profitable, you can just exit them with your profits. So there is ICICI Tech ETF also. Now this is another ETF that tracks the IT index. We have Kotak IT that track the IT index. You can see that the ETFs are just a type of replicating what the IT index is doing. We have SBI IT ETF. So this is SBI IT ETF. So this is a good way to play the IT story in a passive way. So if it makes a move, you can, if you're not interested in allocating yourself in the stocks directly in the stock and you find them too risky, you can always buy ETFs also. So to play it in a passive manner. So this was it for from me today, guys. I think that you have liked this update. Yeah. So keep earning, keep learning, keep sharing. This is Bharat Junjunwala signing off. Jai Hind and Jai Bharat.